And good evening, guys. It is 4:51 p.m. on Wednesday, July 26, 2017. And just wanted to make a video here regarding certainly, I think, what has been the biggest news of the week, although a lot of analysts expected it to be a non-event, but it certainly has been anything but. And that is the Federal Reserve FOMC rate decision and statement today. That came out today at 2 p.m. was when they released the statement. As expected, they did not change the rate. They left it at 1.25%, but it was the statement that attracted the attention. And I'm not going to read the statement. But if you go to forexlive.com and you click on this, you go to the central banks section, which is in this area here. If you scroll down, they have these must-read, and then there's one that says central banks. You'll find this article, and this is the full text of the actual statement that the Fed put out. The bold type has been added by this writer on Forex Live, and you can skim through it yourself. I'm not going to read it. But essentially, I think the issue is that the market pretty much had priced in the fact that there was not going to be another rate hike on this go-around. I don't think anybody was expecting that, and they did not. But I think they were looking for a more hawkish tone from the Fed, about inflation picking up and rolling back the quantitative easing or accommodative monetary policy. And generally, have a very upbeat, hawkish statement. And the market was a little disappointed. The statement wasn't really bad. It was talking about, that employment's picked up and that, things don't look too bad. But when they come out and look at it, they're still looking at inflation being problematic in terms of not getting up to that 2% number that they want, at least in the near term. And they're having a hard time doing that. It's just inflation is not catching up, and that's a measure that they want to see. That's why they did all the quantitative easing. It's the whole Keynesian economics theory about pumping the economy, dropping interest rate, pumping the economy full of money. That should spur on economic growth, causes inflation, and they use that as a guideline, among other things, to judge economic strength. Whether you agree with that or not doesn't really matter. That's what they do. And they said here the stance of monetary policy remains accommodative, and here's where they talk about inflation, and again these bolds have been added by the writer. So again, I think the market was a little disappointed in that, although it had a pretty wild reaction considering. But a couple of things, guys. First of all, again, this stresses the need that you have to know your fundamentals. Anybody that says, that sends out a post on Facebook or says, what happened to the U.S. dollar pairs at 2 o'clock Eastern time today? I got killed. I got stopped out. What the hell? You can't news it. Well, you know what? Then you deserve to be stopped out because you don't. First of all, the economic calendar is out there for everyone to see. It was right on here. And this is why I always say that trading just technicals and just keeping your head in the sand and not knowing what's coming out in terms of fundamentals, especially major things like this, you're asking for trouble. And even if you're a pattern trader, and I'm an Elliott wave trader, but I use fundamentals, and I know this news was coming out, and I at least have a general idea about what to expect. And I follow this stuff, and I don't know what the Fed's going to say when they release these statements. Nobody does. But I look at the patterns on the chart, and I know the news is coming out, and so I know something's going to happen just based on those two things. So, it's a combination, regardless of what your technical system is, although I think Elliott Wave is by far the best of anything. But it's not a system. It's just a way of forecasting, that's all. But although it's a technical system, it definitely entails a lot of market psychology and fear and greed, and captures the human essence of trading. But that's another story. But it is a technical system, but I don't use it in a vacuum, and I don't use fundamentals in a vacuum either. And I've said this many times. So anybody that's whining that they had an issue with this, then if you're not going to take the time to learn it, then don't trade during those times. You're better off just staying out. And there are people that say, well, just don't trade major news events. Well, I think those are some of the best times to trade, but you have to know a little bit about them. That's all. You've got to know where where everything is going to fall in, and at least have an idea of what the market's expecting and what's important to the market. So that's really the key. So anyways, enough about that. So that's what happened, and the market was a little disappointed. So now we go to the charts, and this is my demo account. But I am currently long the euro dollar, and I'm short the US yen and short the US Swiss. Here's euro dollar, and this is continuing to push high as we speak here. This is the 1 hour chart, and so this is right before the news. Let me see if I can zoom out on the time frames here. So of course we know the euro has been rallying up. Here's the daily chart. Okay, it's been in a very strong uptrend. This is not a trend I would want to fight. Now, of course, you can trade it on a lower time frame, trade the corrections, and trade the pullbacks on a lower time frame. There's always that there's always that stuff going on where you can trade this kind of stuff. But for those of you that are just looking at the bigger picture, which is what you need to know, the euro is in an uptrend. Most of the euro pairs are trending up. In fact, just while we're talking, I want to look at the euro Aussie. Okay, that's still in a correction. Okay, back to what I was saying. So. But the euro dollar in particular, with the dollar weakness, has been really just been pushing up higher and higher. So this is really this is where the news came out. And we'll go back to the hourly chart. So this is where the news came out back here, and this is a correction. We've got, and I don't need to count the waves. I know that looking at this uptrend, and then this is a correction. The market was going down just before the news came out, which is usually a really good sign when that happens, because that means the big traders are squaring up ahead of time. That's a little telltale sign. I mean, literally like minutes before the news comes out, I will go down to like the 1 hour chart or lower, and I'll look at what it's doing. And if it's moving opposite direction in like a corrective manner away from where I expect, then that's usually my signal that the second that news comes out, it's going to reverse and go up. And then of course that's what happened. You can see we're just pushing straight up here on the euro dollar. This is the 4 hour chart too. So now I don't know how long this is going to go from a forecasting standpoint. From an Elliott wave standpoint, I'm not counting these waves. I'm looking at what I'm going to do is look at this particular piece right here as its own wave and its own impulsive wave. And that's the nice thing about Elliott. It's fractals. So this was a corrective move, and we started a new uptrend. And I can probably label this as 1, 2, or now in wave 3. At some point we'll end this, and then we'll have a little correction. It'll go up for a 5, and then it'll end. And whether it ends longer term or not, I don't know. I don't need to know that right now. All I know is this is in a trend right now, and this is where this trend started. We had a little correction. Now we're moving up. And I don't know whether this is wave 5 of 3 right here. It doesn't really matter. So I'm going to stay in this, and I'm going to wait until we see a little deeper correction, and then we'll probably go up for the wave 5, and then I'll probably look to exit. And the wave 5 is usually around the same length as wave 1, which is about 47 pips. So when this wave 3 is over, we'll probably have like a sideways correction. That may actually happen overnight tonight, who knows, and then it'll go up another 40 or 50 pips, and then it'll end. So, and you can also see the CCI, which again, guys, I don't follow. I'm not an indicator person, but this is what I would look at. And this indicator is actually following this trend too. Here was the initial push up. We have all these CCI lines compressed going up. Here's the little pullback. Now we're going up compressed. We crossed through 90, the positive 90 right here. We have compressed lines going up, crossing through straight up. And now we have this little flag on a flagpole where we're kind of going down with the lines spread apart. That's a corrective structure, and that indicates that the market's going to pull back and correct, but that the trend is not over, and that's probably this little move right here. And this is probably running out of a little bit of steam here, so we'll probably see a little deeper correction. But again, this is only the 30-minute chart, so that might not last all that long. So from an indicator standpoint, this is I would just use this as confirmation to know that this is in an uptrend and it's not over. So, all right. So looking at the U.S. Swiss, this is the 20-minute chart. But again, this looks like potentially ending this initial trend on the 20-minute chart. So again, this is the 20-minute chart. So this could be the end of this little initial trend. Of course, we're going into the Asian session now. It's 5 p.m. New York time. So now we're seeing this push up. This is just market squaring. I would expect now heading into the Asian session that we'll probably just kind of move sideways, maybe correct up here overnight, and then see this trend continue. Because if you zoom out a little bit here, this is probably going to make a new low. And just much like the euro dollar has been going straight up, the U.S. Swiss has been, of course, which is the opposite, the inverse of the euro dollar. In case you didn't know that, the euro dollar and the U.S. Swiss are inverse pairs. They move completely opposite of each other. This really respected this trend line. If you like your trend lines, this is a good one. And this is probably going to continue down and at least tag this low, if not make a new low. So even if it just goes down to here, we've got another 56 pips or so to go, but it probably will make a new low. And again, from an Elliott wave standpoint, it looks like I said, 1, 2, 3, 4, 5. We may have ended this little smaller trend here. Let's see here. And when I was looking at this before the news came out, I looked at this. Let's see if I can find it here. I looked at this as a trend that was at least going to end. I just labeled this. This is an old arrow. I don't even know what time frame that was supposed to be on. I had looked at this as a trend, probably something like 1, 2, 3, and then there was a 4 and a 5 in here on a lower time frame. So I knew this was probably going to end and head down anyways. And so, but given the fact this is down, that this whole pair is down, that this was going to correct longer term. So, and then on the U.S. Swiss, exactly the same as the U.S. The U.S. yen, same as the U.S. Swiss. This one be accelerated probably a little because remember, when the dollar is having problems, there is always a flight of safety. People are going to move their money to another currency they feel is more secure, and the yen is kind of the opposite, is the yin to the dollar's yang. So when the dollar is weak, money tends to flow to the yen. So of course that would just amplify the move down on the U.S. yen because it's yen buying and dollar selling going on here. So and that's what we see. We had this market go up, and now it's heading down. And again, I expect that this probably will at least come down to here, if not make a new low. May come down here, correct, and then continue down again. And I don't really need to count waves. I mean, this is this is pretty clear. Having an idea of what's going on the longer time frame. This is the daily chart. This is probably going to keep going down, and clearly on these lower time frames we're in a downtrend. So again, I don't know over the midterm how long this is going to go, but for now we're going to continue this move down. So, but again, guys, I saw kind of the corrective moves or the end of trend moves on the Elliott wave patterns. They weren't crystal clear, but they were there. But more importantly, in this case, I knew what the fundamentals were saying. I know the dollar has been weak outside of just looking at the chart, and so when that news came out, I was already in the trades, and I had very little concern that I was going to be wrong, just based on the shape of the corrections and the way they were looking at the time that news came out. And so doing all those things, and again knowing what the fundamentals are, is and at least having a clue about those is going to really help you. It keeps me out of taking trades just out of boredom and watching and just jumping into something for the sake of jumping into it. I'll time my trades and I'll stay with it for a while, and even if I only take a few trades in a week. So All right, so I hope that's helpful. Sorry, it's been a while since I made a video. Just been a little busy. I was on vacation last week, although I was trading, but I certainly didn't make any videos. So that's it, guys. I hope you have a great night. Any questions, leave them in the comments below, and share the video, and I appreciate it. I'll talk to you all soon.